Hey everyone, welcome back to Tesla Daily. Today is April 6th, 2026, and we've got a lot to cover. First up, let's talk about Tesla's impressive presence in South Korea. It's clear that we're making waves in that market. The demand for our vehicles is really taking off, and it's exciting to see how well we're being received. Now, shifting gears a bit, let's discuss the launch of Tesla's semi-truck. This is a big step for us, and it's going to change the game in the freight industry. We're all eager to see how it performs in real-world conditions. In some good news, the NHTSA has officially closed its investigation into Tesla. This is a relief for all of us, as it means we can focus on what we do best, innovating and delivering amazing products. And speaking of innovation, Elon Musk is currently putting some pressure on potential SpaceX investors. It's a reminder of how interconnected our ventures are. We're all rooting for SpaceX as they continue to push boundaries. Lastly, let's touch on Tesla's recent price surge. While we're seeing some ups and downs with the phase-out of incentives, it's important to remember that we're in this for the long haul. So, as we navigate these changes, let's stay optimistic. Together, we're building a brighter, sustainable future. Thanks for tuning in, and let's keep pushing forward. In a remarkable achievement, Tesla has emerged as South Korea's top-selling imported car brand for the first time in Q1 2026, surpassing traditional leaders like BMW and Mercedes-Benz. This milestone is particularly significant as it encompasses the entire import market, including internal combustion engine (ICE) vehicles. According to the Korea Automobile Importers and Distributors Association, (KADA), Tesla delivered 20,964 vehicles between January and March 2026, marking a massive 335% increase compared to the same period last year. The surge in sales was especially pronounced in March, where Tesla registered 11,134 vehicles, a 330% year-over-year increase. This growth is largely attributed to the sustained popularity of the Model Y, which has captivated Korean consumers with its impressive range, performance, and technology. The broader market dynamics also played a crucial role. South Korea's government finalized its EV subsidy program earlier this year, providing clarity that likely accelerated consumer demand. Furthermore, rising global oil prices have prompted a shift towards electric vehicles, with EVs accounting for 47.8% of imported vehicle sales in March, surpassing hybrids for the first time. Tesla's innovative approach is also evident in its infrastructure expansion, as the company recently converted a former gas station into a supercharger in Gyeongju. This site, equipped with 8 V4 superchargers, not only enhances Tesla's charging network, but also symbolizes the transition from fossil fuels to electric energy. Despite facing challenges in other markets, where sales fell short of Wall Street estimates, Tesla's record-setting performance in South Korea underscores its strong brand presence and consumer loyalty. As we look ahead, Tesla's strategic moves in pricing and infrastructure development suggest a promising trajectory in the competitive automotive landscape. Tesla's rise in South Korea is a testament to the growing acceptance of electric vehicles and the brand's ability to adapt to market conditions, said a spokesperson from the Korea Automobile Importers and Distributors Association. With a robust lineup that includes the Model 3, Model Y, and the recently introduced Cybertruck, Tesla is well-positioned to maintain its momentum in the region. As we continue to monitor the evolving landscape, it is clear that Tesla's influence in South Korea is only set to grow. Now, let's shift to the next story. After years of anticipation, Tesla has finally begun high-volume production of its semi-truck, a vehicle that promises to significantly reduce emissions in the freight transportation sector, which accounts for over 20% of U.S. transportation emissions. Elon Musk initially unveiled the Tesla Semi back in 2017, with promises of production starting in 2019. Fast forward to 2026, and we are witnessing the first deliveries, albeit much later than expected. Mike Roth, executive director at the North American Council for Freight Efficiency, reflected on the long journey, stating, "They are elegantly delivering way late again." But he acknowledged that Tesla often delivers on its promises eventually. The Semi is designed to travel 500 miles on a single charge, making it a game-changer for long-haul trucking. Jay Leno, who recently drove the production spec version, praised its potential, calling it a disruptive force in an industry that has seen little innovation. The truck features an updated design that enhances aerodynamic efficiency by 7%, which is crucial for reducing energy consumption at highway speeds. Tesla offers two models, a long-range version with a 500-mile capacity and a shorter 325-mile variant that is lighter and easier to maneuver. Despite the excitement surrounding the Semi, significant challenges remain. The lack of megawatt-scale charging infrastructure and an overstressed power grid could hinder its widespread adoption. Additionally, the policy environment supporting electrification has cooled, raising questions about whether the market is ready for this transition. Adam Browning from Forum Mobility noted, "Once truckers actually drive these vehicles, they really enjoy the experience," highlighting the truck's advantages over traditional diesel vehicles. As we look ahead, the success of the Tesla Semi will depend on overcoming these infrastructure and regulatory hurdles. If Tesla can navigate these challenges, the Semi could lead the charge in decarbonizing the trucking industry, potentially reshaping the future of freight transportation. The long-term outlook remains cautiously optimistic as the demand for sustainable transport solutions continues to grow. Here's the next update you should know. In a bold move reflecting both supply and demand dynamics, Tesla has raised the prices of its remaining Model S and Model X vehicles by $15,000. This adjustment comes as the company officially halts production of these iconic models, marking a significant shift in its product lineup. The new starting prices now stand at $109,990 for the Model S AWD, $124,900 for the Model S Plaid, $114,900 for the Model X AWD, and $129,900 for the Model X Plaid. This pricing strategy is not merely about numbers. It taps into the sentimental value of these vehicles, which have been pivotal in establishing Tesla's reputation as a leader in electric vehicles. CEO Elon Musk has emphasized the emotional connection many buyers have with these models, which represent the brand's early innovation and success. As production winds down, Tesla is left with a limited inventory of approximately 600 units globally, primarily demo vehicles. The inclusion of the Lux package, featuring full self-driving capabilities, lifetime supercharging, and premium connectivity, adds considerable value to these final units, justifying the steep price increase. Analysts suggest that this move is a masterclass in monetizing nostalgia, transforming the remaining vehicles into limited edition relics that collectors and loyalists are eager to own. These are not ordinary cars. They represent the purest expression of Tesla's original promise, noted industry observers. Looking ahead, while the discontinuation of the Model S and X may leave a gap in the premium market, Tesla is pivoting towards mass-market electric vehicles and robotics, including the anticipated Optimus humanoid robot. This strategic shift aims to position Tesla for future growth in a rapidly evolving automotive landscape. As we reflect on this transition, the long-term outlook remains cautiously optimistic. Tesla's focus on innovation and its commitment to expanding its product offerings could help mitigate the impact of losing its flagship models. However, the competitive landscape is intensifying, with Ford set to introduce a $30,000 electric vehicle in 2027, potentially reshaping the affordable EV market. In summary, while the price hike on the Model S and X underscores Tesla's strategy to capitalize on their legacy, it also signals a pivotal moment as the company prepares for its next chapter in automotive history. Here's the next update you should know. In a notable shift within the automotive landscape, Xiaomi has successfully recruited Dieter Lorenz, Tesla's senior manager of delivery operations for Central Europe, as its new head of delivery and logistics Europe. This strategic hire signals Xiaomi's aggressive preparations for its anticipated market entry in Europe by 2027. Lorenz, who has been with Tesla for over 6 years, played a crucial role in overseeing delivery operations across multiple countries, including Germany, Poland, and the Czech Republic. His departure is emblematic of a broader trend, as Tesla experiences a sustained exodus of talent across various functions, including finance, engineering, and manufacturing. The loss of key personnel, particularly in Europe, comes at a challenging time for Tesla. The company's European vehicle registrations are declining, which could signal further challenges ahead. Now let's shift to the next story. In recent weeks, Tesla has found itself embroiled in a series of lawsuits that raise serious questions about the safety and reliability of its autopilot and full self-driving FSD features. These legal challenges come on the heels of a tragic incident where a father and son lost their lives in a Model 3 crash, prompting a wrongful death lawsuit against the company. The lawsuit alleges that the vehicle's electric-powered door handles failed to operate after the car crashed into a tree, preventing escape as the vehicle caught fire. Shantoria Herring, the mother of the deceased boy, claims that the autopilot features, which were supposed to prevent such accidents, malfunctioned, leading to the crash. Additionally, another lawsuit from Las Vegas alleges, here's the next update you should know. In a significant development for Tesla, the National Highway Traffic Safety Administration, NHTSA, has officially closed its investigation into the automaker's Actually Smart Summon feature, which affects approximately 2.59 million vehicles. The investigation, initiated in January 2025, examined reports of low-speed crashes associated with the feature, which allows users to remotely maneuver their vehicles in parking lots using a smartphone app. After reviewing around 100 incidents, the NHTSA concluded that the crashes were minor, involving only property damage, with no reported injuries or fatalities. The NHTSA's findings indicated that most incidents occurred early in a summon session when visibility was limited, often due to environmental factors like snow obstructing the vehicle's cameras. The frequency and severity of reported incidents did not warrant further regulatory action, the agency stated. Tesla has proactively addressed these concerns through 6 over-the-air software updates, enhancing the system's obstacle detection capabilities and improving its response to dynamic objects. Despite this positive outcome, Tesla's challenges are far from over. The NHTSA has escalated its investigation into Tesla's full self-driving FSD system, now covering around 3.2 million vehicles. This scrutiny follows reports of traffic violations and crashes linked to FSD performance, raising questions about the system's ability to operate safely in various conditions. The NHTSA's engineering analysis could potentially lead to a recall, as it focuses on whether the FSD system adequately ensures driver engagement and adheres to traffic laws. As we look ahead, Tesla's regulatory landscape remains complex. While the closure of the Smart Summon investigation is a relief, the ongoing scrutiny of the FSD system highlights the critical importance of safety in the company's ambitious push towards full autonomy. We are committed to improving our systems and ensuring the safety of our drivers and the public, a Tesla spokesperson noted. The company's ability to navigate these regulatory challenges will be pivotal as it continues to innovate in the automotive and AI sectors. Now let's shift to the next story. In a stark warning for investors, JP Morgan has reiterated its bearish outlook on Tesla, predicting that the company's stock could plummet by as much as 60% by the end of 2026. Analyst Ryan Brinkman has set a price target of $145, a significant drop from current levels around $360. This forecast comes on the heels of Tesla's disappointing first-quarter delivery report, where the company sold 358,000 vehicles, 4% below analyst expectations and 7% lower than JP Morgan's own forecast of 385,000 deliveries. The crux of JP Morgan's concern lies in the record surge of unsold vehicles, which has reached unprecedented levels. A record surge in unsold vehicles adds to free cash flow woes, Brinkman noted, highlighting that Tesla produced over 50,000 more vehicles. Now let's shift to the next story. In a surprising turn of events, we learned that members of Elon Musk's private security team were granted federal agent status, despite lacking the necessary qualifications. This decision, made during Musk's tenure as a senior advisor to President Trump, has raised significant concerns regarding the standards and practices of the U.S. Marshals Service. According to newly released emails obtained through a Freedom of Information Act request, the Marshal Service initially hesitated to approve the deputization due to documented concerns about the guards' qualifications. Some had not completed basic law enforcement training, nor did they possess the requisite experience typically required for such a designation. Despite these reservations, waivers were granted, allowing Musk's security personnel to carry firearms in federal buildings. Now let's shift to the next story. Ex-owner Elon Musk is trying another tactic to boost ad spend in the app, this time by pressuring potential SpaceX investors to also buy X ads and subscribe to xAI's Grok tools. As reported by the New York Times, Musk has told banks, law firms, and other advisors working on the upcoming SpaceX public offering that they need to be paying customers of xAI and advertise on X in order to win favor for his business. As per the New York Times, some of the banks have agreed to spend tens of millions on the chatbot, and they have already started integrating Grok into their IT systems, 3 of the people said. The New York Times said that bank. Well, that wraps up our update for today. We really appreciate you tuning in to Tesla Daily Insights. It's always a pleasure to share the latest with you. We'll be back soon with more news and insights, so stay tuned.